Okay, update on uranium here using CCJ as our proxy. Again, that's Cameco. And you can see on the daily level, daily chart, we had our daily swing, our daily cycle low on day 40. So that was a swing low once we went above this high. And this is now day 9. We made a slight new high this today, so at 24.23, right? The previous high was 24.12. Now, it would be really ugly if this turned out to just be, some kind of little double top, which is totally possible, right? If we zoom in, right? Totally possible that this is just a, slight higher high. And we would know that once we get a move below 23.48, because that would give us a daily swing high, which would be a signal that the daily cycle high has happened, right? Like this is the highest point of the daily cycle, and that we are now going to start to ratchet down, right? Something like that, maybe that, and then that, and then that, and then that, and then that, like something like that, right? So that's what we want to be on guard for. That's the daily chart. Now understand what's happening on the weekly. We have a possible weekly cycle low or intermediate cycle low, which is an ICL abbreviated, because we had, I'll zoom in, same exact principle, higher time frame, so more important. Once we went above the high of this candle here, right? This is the low, this is the candle that marks your low. Once this candle here went above this high, that gave us a swing low, right? That was 23.15 is that level. So as long as we stay above that level, we're probably in good shape. And more importantly, we now have another high above the previous week's high. So this was 2 weeks ago. This is 1 week ago. This is the current week. So we're making forward progress, right? The hope now is that, on the bullish side is that we keep making a move up. Now there are going to be lows in the process, but we keep making a move up here, right? And we keep moving. So that's what we're watching for. And this is also important to note. This is your 10 period moving average. In this case, it's a weekly chart, so it's a 10-week moving average, clearly sloping down. And it's all the way up here in the $27 area. We're down here at 24. So it'll be interesting to see, do we get all the way up here and then get rejected? I'd say your risk levels are pretty clear. This is definitely good enough for a long, as long as you have stops in place. But do know that the broader market does look weak, and that's obviously going to weigh on this. And this does have the look of a bear flag. But that's the thing. These declines, well, I guess this is a bad one. This is a bad example, right? This decline, and then you had this false breakout. So it's going to bear careful watching to be sure.